Well, hi everyone. Welcome to the Buffett and Beyond Saturday Stock Market Recap, and this is April 12th, 2025. And what an unbelievable week it has been, which saw the market go up the most, or talked about the S&P, the most since 2008 in one day. And folks, it's been a wild week, and let's see what's going to happen next week. Meanwhile, if you want to live on this beach like Jimmy Buffett once did, you've got to learn how to invest even better than Warren Buffett does now. We're going to show you that right now. And the market this week, well, we just witnessed the historic week in the markets as the S&P exhibiting the biggest up move since 2008. But 2008 also saw the S&P fall almost 50% before 2009 began the comeback rally. And the question is, are we out of the woods yet? Weekly stock analysis video. Well, Arthur Gallagher is a defensive stock that not only went up while the market went down, but also more than tripled the 5-year returns of the overall market. It's our kind of stock, folks. And our ETF video, well, our top 12 stocks in the NASDAQ 100 rallied several times greater than the index itself this past week, like 6 times more. What a great comeback. And let us look at the S&P 500, and these red lines are volatility lines, and the line right in the middle, that's the 20-day simple moving average. And we can see the market went down below those bands, and when it does that, boy, you better watch out for some weakness. And then here's that Wednesday rally, took us right back up, almost to that 20-day moving average, and then fell back Thursday, and now is up Friday. And I'm recording this before the market closed, but we're up nicely going into the weekend, and that means confidence is coming back to the market because people don't want to be long over a weekend when they think something might be going on. But everything already went on and went off and did what it's going to do, and it looks pretty good in here, folks. Now, this indicator down here, which is our intermediate term indicator, has not turned up yet. This blue line has to cross this red line for us to have more confidence. But let's look at another indicator. And okay, same chart on the top, but down here is a stochastic indicator, and this measures where the market closes during its travel of the day. So when we look at this big day in here, which was Wednesday, we see this little line up here. That's where it closed. So in other words, you take the travel of the entire day of the S&P 500 in this case, and where does it close? Does it close in the top half or the bottom half? That's what this measures. So on Thursday, even though the market was down for the day, it closed above its midpoint and of travel for that day. And Friday, yeah, you can see, even though the market has not closed yet, it's at the near the top of its travel. So that's what turned this indicator up, and it has been a pretty good indicator. We use it all the time, but we also use the previous indicator I showed you, this one right here, which is our intermediate term indicator. So with this one showing nice movement in here, we like that. And so we're getting bullish on this market. We said 2 weeks ago we thought the worst was over right back in here. And it was not quite over, but then it started moving up. And it's all because of that news out there. So it's a news-driven event, but the market is worried about, recession, the big R word. We don't like that, and neither does the market. But we'll see what happens. We'll see what happens after this rally and into next week. But right now, people are more confident going into the weekend, and I'm talking about market participants, much more confident than they certainly were last week. And portfolio protection, well, the April 17th put has 1 week to go, but we sold it off because it had a premium of $10 just Friday morning. So we sold this one and went all the way out to August, and we did a spread between 510 and 455. So this whole thing did not cost us anything because of the amount that we sold over here. Now, the thing is that if the market goes below 455, and here we are 80 points higher, And remember, the SPY is 1/10 of the S&P 500. So if it goes below 455, 1/3 of our portfolio is not protected. But that's a long way to go. And for the Mays and Junes, we are protected all the way down. So 2/3 of our portfolio now is totally protected. And 1/3 is protected between 510 and 455, or 80 points, which is 15% below where we are now. So it has to go down a long way before it hits this number there. And of course, we would take protective measures before that. So again, May, June, and then August. And we just skipped July because we got good numbers on the August puts. But these premiums were very, very high. That's why we did a put spread in here on the SPY. So if you follow our daily letters, you'll understand because I went into detail on that. So this one is gone, and August 15th, we have three SPY puts for about $130,000 to $150,000 portfolio. So, folks, what a tumultuous week, but it ended happy because of that big move on Wednesday with the S&P 500. So the market's closing up for the week, and it's closing up on Friday for the day that I'm recording this, and that bodes well for next week. Monday is always a tough day, but then things look good going into the 3-day weekend next week. Yes, it's Easter coming up, folks. So we'll see what happens, but we're positive, at least for a while in here, and things are going well out there on the political front. So, folks, you go out for the weekend, forget about the market because it'll be back open on Monday. And, folks, we'll see you back here in a couple of days with our daily newsletter.